Bank of India is in spotlight after reporting. What do you argue a decent set of numbers? The stock is also up about 2.8%. Asset quality improved. The provision expenses declined as well. And the conversation with Mr. Rajneesh Karnatak, who is the Managing Director and CEO of Bank of India, revolves around all of this and more. Remember, as much as NBFCs are in focus, what PSU banks are doing in terms of loan growth and asset quality is very, very important. Here are a slice of this conversation.
Your margin number has come off just about 6 basis points. Let's talk margins first. Talk to us about where does it bottom and what is the full year guidance with regard to margins?
Yeah, so thank you for having me here. As regards the margin is concerned, as you rightly said that the reduction in the margin has been only 6 basis points. So from it has come down to 2.55% from 2.61% as on March 25. There has been a stress as far as the net interest income is there. If you see the net interest income, though the net interest income, interest income has gone up, there has been more increase in the net expenses, interest expenses which have been there, which has finally resulted in a net interest margin coming to the global net interest margin coming into 2.55%. So, however, we feel that this has bottomed out for the simple reason that already the 1% cut of the repo, which has happened from February to June, it has already happened and it has been factored in our books. On the loan side, 60% of our book is the EBLR book, which has already taken that thing. 30% is the MCLR book. Going forward on the liability side, the pricing will start to rehappen from the quarter 3 after the 3rd October onwards. And with that, the NIMs would start stabilizing. So we feel from the bank side that the global NIM of 2.55, which we have shown in the this Q1 of FY26, is the bottomed out NIM, and it would improve from here in the ensuing quarters.
Okay. Okay. So this is where it bottoms, and it will start to improve. So, sir, where is your full year NIM placed at?
So at this moment, I would not like to give any particular number, exact number, but a range, if we can say the number, we should be at around 2.60 in the global NIM as on March 26, because the repricing of the deposit is yet to take place. Most of the repricing would be happening from the Q3 onwards. So H2 should be much better than the H1 in this financial year, as far as the NIMs are concerned.
So sticking with the top line, the other income also has risen quite sharply, which has aided operating profit, especially when I'm looking at it YOY. What's happening there? Give us perspective.
Yeah, so other income, if you see that we have crossed the 2,000 crore mark in the other income in this quarter, and it has grown by on a YOY basis by 66%. So if you see the last 3 quarter results of the bank, our other income is more than now 2,000 crores consistently. And we feel that in the coming quarters, also in the next 3 quarters of this financial year, other income will be more than 3,000 crores, 2,000 crores per quarter. And it is backed by some income which we are getting from the treasury. There are recovery from written off accounts. There is other income which is coming from the loan products also, from process fee, LCBG commission and upfront fee, etc. Because our loan book is also growing consistently on a YOY basis. So all these things, and also obviously the exchange income and the third party products income, all these things taken together should give a run rate of more than 2,000 crore per quarter on the other income side. Okay.
So this is sustainable going forward as well, is the understanding that I take from your answer. And therefore, sir, the sustainability of operating profit also likely to hold up is the understanding.
Yes, very much. So we have shown an operating profit of 4,009 crores and it has gone up by 9%. So on a YOY basis, yes, as a guidance, we are giving a guidance that the operating profit should improve by 10% on a YOY basis in March 26.
Understood. The other piece that's aiding your numbers is the credit cost number, sir, which has come off quite sharply. What's the outlook with regard to that number? Is that too sustainable, or will it normalize? If it does, at what level?
So credit cost, we have given at 0.68% for this quarter. and we are very much confident that we'll be able to manage it at around 6.70 at around 0.70, 0.65 to 0.70 in March 26.
Understood. And sir, pipeline of recovery, how is that playing out? Give us that perspective too.
So as far as the pipeline in recovery is concerned, we have a healthy pipeline. As in the recovery, we have certain OTS schemes which are there in the bank, both for large corporate and small ticket sizes loans. If I give you a number, we had a gross cash recovery of more than 9,500 crores in FY25 in the full year 12 months. So this quarter has also been good, more than 2,000 crores of gross cash recovery we have shown. And we are very confident that whatever the number we had given at around 9,500 in FY25, we'll be able to repeat it in FY26.
Your gross cash recovery stands at 2,150 odd crore. You've done 2,700 plus crore in both last quarter as well as last year. So give us that perspective.
Yeah.
Is this seasonality? Is this maybe something which will get bridged in Q2? How should one look at that?
Exactly. So Q1 is normally a subdued quarter for all the banks, whether it is on the credit side, interest income side, or on the recovery side and collection efficiency side. But H2 is always better for the banks. So in that perspective, I am saying that the gross cash recovery that we did in the 12 months of FY25, which was around 9,500, we'll be able to maintain that run rate.
Got it. So I want to talk a little bit about growth as well. 14% growth in advances is of course strong, and I give you that credit. How sustainable is what I'd want to understand? Because full year FY26, can you continue to do maybe mid-teens kind of growth on the advances front? The deposits, of course, playing a bit of catch-up, but give us that perspective too, maybe deposits.
So as far as the credit growth guidance is there on the global advances side, we are saying that it should be at around 12 to 13% for March 26. The background for that is, as you are aware, that we have given a very good credit growth in the RAM segment at around 16%, within which the credit growth in agriculture was more than 12%, in MSME it was more than 16%, and for the retail it was more than 19%. So with this backdrop and the thing that we have a very robust pipeline, so we, as far as the credit pipeline is concerned, as on 30th June, it is at around 80,000 crores, which includes the credit pipeline of RAM, which is around 10,000 crores, and the international and the corporate pipeline, which is at around 70,000 crores. And the entire, this 80,000 crores will get disbursed in the ensuing 2 quarters of September and December. With this thing in mind, we are very confident that whatever the growth number we are giving of around 12 to 13% for FY26, we'll be able to achieve.